Hello, I'm David Cassidy. As you can see from the accompanying table, to say it's been a difficult week is an understatement, and no doubt many people are worried about their wealth as well as their health. With the global equity market volatility we have had over the last 3 weeks, it isn't surprising that, like many people, some of our clients are anxious, and we would like to reassure you that your portfolios are well diversified across a variety of asset classes. While this diversification hasn't stopped your portfolios from falling, it has helped to protect against bigger losses. For example, at the close of business on Friday the 13th of March, the FTSE 100 index is down 29.6% since the last portfolio statement date of the 5th of January, while a typical cautious risk client is down 12.63%, balance down 20.20%, and adventurous 20.50% over the same period. Now, while we appreciate that the coronavirus is dominating the news headlines, and we fully understand and appreciate that the current equity market weakness is both unpleasant and unnerving, it is very important to maintain a long-term perspective and resist the urge to react to every new development or rumour. We structure your portfolios and then manage them to ensure they remain properly diversified and are appropriate for your long-term goals, time horizon and tolerance for risk. There will always be periods of market uncertainty and volatility, and this current period is no different. However, here at My Wealth, we take a long-term approach to investing because evidence shows that this leads to better outcomes, as time in the market is more important than trying to time the market. Equity markets hate uncertainty, and thanks to the scars from the global financial crisis in 2008-2009, equity markets have tended to react disproportionately to any uncertainty or disappointment, and in this technological age, they can be prone to sudden, violent and frequent movement. And unfortunately, this is one of those periods where panic has gripped financial markets. However, we believe that this has been indiscriminate and emotionally driven, and that as a result, it may not actually require much good news for global stock markets to rebound quickly. This week, although we have had proactive and joined up approach between the Bank of England and the UK government with an aggressive and coordinated stimulus package, the actions from the European Central Bank and Donald Trump failed to calm market nerves, while the restrictions on the movement of people has further weighed on sentiment. However, we firmly believe that this week's collapse in the oil price is actually positive and is the equivalent of a massive tax cut for users, which helps to make up for some of the shortfall from Europe and the US. For example, global oil consumption is approximately 100 million barrels a day, and the cost of a barrel of Brent dropped to just $33 from $45 last week and $69 at the start of the year. This $36 decline roughly equates to 3.6 billion of stimulus per day, which is a massive 1.3 trillion per annum. Consequently, while the path for financial markets is unlikely to be smooth, and we fully expect volatility will remain elevated in the short term, we are confident that global equity markets will be higher by the end of the year. During these turbulent times, we will continue providing our daily market updates, so please check back with us, as we will provide you with all of our thoughts on all the market moving events across the world. For example, from the US on Monday, the 16th of March, we have the US Empire State Manufacturing Index, retail sales data. And obviously this is even more important than normal. And we're expecting US policymakers to cut US interest rates aggressively and lay the foundations for additional stimulus measures such as further quantitative easing and lending facilities. Elsewhere on Monday, we have Chinese retail sales, and on Tuesday, the 17th of March, we have UK unemployment data, unemployment rate and weekly earnings. As always, we remain vigilant and we will act on your behalf if we believe there is a need to do so. Please keep looking at our updates and remember, we are here to talk to, so please do not hesitate to call us. We are here to help.